Hello everyone, this is Przemysław Radomski talking to you on Tuesday, October 19th, several hours before the markets open in the US. And in today's pre-market trading, we have some interesting developments, and I'm going to talk about them in today's video. First of all, we see a move lower, a sizable move lower in the USD Index, which might seem like a game changer here. After all, the USD Index has broken above the previous yearly highs, consolidated above these lows, but now it's moving back below them. So was the breakout invalidated right now? Well, it's too early to say. As you can see, the USD index did move above the August intraday high and below the early October low, which is not that important, but it moved just slightly below the previous August high in terms of the closing prices. Closing prices, extremes tend to be more important with regards to making the conclusion of whether a breakout was invalidated or not. So the intraday move, invalidation, okay, fine. But what happens with regard to the closing prices? The session hasn't even started in the US, let alone closed. So the jury is still out. The move is not that big. I'd say it's tiny. 20 minutes ago, the USD index was not even below these lows. Below the August high. And therefore, this move lower doesn't look really sustainable or convincing to me. It all depends on where the USD index closes today. But if it closes below the August highs, then we still have strong support in the form of the March high. And that would be a natural downside target for the short term if the USD index closes the day below the August high of 93.59. So I don't really buy the bearish narrative right now. The consolidation took too long and was too clear for everyone around the world to see in order for it to be invalidated in a move that for now takes about 20 minutes. Even a daily close below it should be taken with a decent amount of doubt. So far it's not a game changer. Okay, and if that's happening in the USD index, let's look what's happening in gold. Well, gold moved higher as one would expect it to, but it didn't do anything important in today's pre-market trading. It moved by about 1% higher, but it's not a move to the declining resistance line. It's not a move to the previous highs. It doesn't change anything from a technical point of view. And what I was talking about in the previous video, and by that I mean the analogy to what happened in 2013, the back and forth decline, the weekly reversal, these things, it all remains up to date. It wasn't invalidated by today's 1% rally. It's quite in tune with what happened at that time. Yes, I did say in that video that gold was likely to decline in this week, but let's not forget that it's early on Tuesday, so the vast majority of week is still ahead. And as gold moved slightly higher, 1% higher, silver moved higher by almost 2.5%, so much more than gold. And as you may recall, I told about that and wrote about that multiple times. If silver outperforms gold on a very short-term basis, it's not a bullish sign, it's actually a bearish sign. because that's what tends to happen at the tops and before declines, usually quite big and quite sharp declines. Remember what happened in early August? This session? Remember what happened in early September? This session, the rally was even bigger. And what changed? Well, nothing. That was a perfect shorting opportunity. By the way, please know that it's a good idea not to be shorting silver right now. That might be interesting observation for the premium subscribers that watch this video. I'm not going to go into details over here. What else I would like to tell you about this chart is that silver has broken above its declining resistance line, which seems important to those that are new on this market. Silver tends to provide fake breakouts right before declining, and thus proving that these breakouts were actually fake outs. And you can see it clearly in the previous cases. We saw that in July, all right? That's this line. Let's take a look at this resistance line. It was broken over here to the upside, and a big decline followed. The next line, based on the second top, okay, based on this top and this top, the second line, okay, over here, it was broken in early August. What happened then? Well, a big decline followed. All right, next line. Next line was also broken in early September. What happened next? That's right, you guessed it. A big decline followed. And now we see a breakout above this line, which connects the June top and the September top. Well, what's likely to happen? The history is likely to rhyme once again, and silver is likely to decline. This is not the classic book example of technical analysis, because most people, especially those who are not, who have not been following silver market for more than a decade, which is the case with me, they will likely tell you that the breakouts are bullish. But before applying any technique to any market, just please do it for yourself, do it for your family. Just check if this technique worked on that market. Because if it didn't, the odds are that this particular part of a technical analysis might not apply to this market. In case of silver, things are specific. If the moves are not confirmed by gold, they shouldn't really be trusted. And well, right now, gold is not moving to new highs. Gold is not breaking above its declining resistance line. Silver is. And that's not bullish. Especially if at the same time, mining stocks are not showing the same kind of very short-term strength. And let's take a look at what mining stocks are doing right now. They are slightly above the previous high. Slightly. This is GDX ETF on the London Stock Exchange. So we have, so we see what the price is right now, even though the markets are not yet open in the US. Of course, this is not the price in the US dollars. It's not the same price for the GDX ETF as it's listed on the US Stock Exchange. The price is different, but the relative moves is what matters here. And the move above the previous highs, it's tiny. Actually, a few seconds before I started watching this, recording this video, it was still below the previous highs, and silver was well above them. So silver is outperforming. Miners are not really following. Yes, they're still stronger than gold, but mostly based on how big the decline in gold was just a few days ago. So what does it all tell us? It tells us that it's tempting to run for the hills, claim that the trend is now bullish, and that the entire strength seen previously in the USD Index was fake, and that now the USD Index will continue. Well, it will decline. That it ended this year's rally, but I seriously doubt it. A breakdown that's in place for like 30 minutes right now is not as important as the verification of the breakdown that's been in place for almost a month. Breakouts verification. That is. This is way more important than this tiny thing. And it's not even a closing price, it's just an pre-market trading. So we might as well see a powerful reversal to the upside, something along the lines of what we saw in late June. And the markets could react similarly. And what happened in late June? Well, gold moved then to its short-term lows below the previous lows. In this case, a move below the previous lows would imply a move, well, much lower. So summing up, the situation on the precious metals market remains bearish, even though today's pre-market session might make you think otherwise. I will be monitoring the markets and I will report to my subscribers accordingly, either through regular alerts or through quick intraday messages that I'm also sending if the situation changes suddenly. So thank you for watching. If you're not yet my premium subscriber, I encourage you to subscribe. If you're not even on our free mailing list, I encourage you to sign up for it because it includes not only our free mailing list, of course, but also a 7-day free trial for our premium services, including my gold and silver trading alerts. And also you'll stay up to date with my videos because YouTube notifications sometimes work, sometimes they don't. But still, I encourage you to subscribe to the YouTube channel as well. A thumbs up would be nice as well. Thank you very nice. Did I just say thank you very nice? Thank you very much. Thank you very much. Have a great day. And also, please note that whatever I said was just my opinion, not an investment advice. Please read the disclaimer below this video. Thank you. Signing off. Bye-bye.